everyone, it's Paul Ward here, and welcome to 15 Minutes with a Realtor. I am your host, Paul Ward. I have a very special guest today, Carly Rosalez with The Money Store. Carly, welcome to our show.
Hi, thank you for having me.
Absolutely. So the big talk, of course, are rising interest rates, and they've gone up several times in the last few months. I just heard this morning that they are the highest that they have been since 1998.
Yep.
So you can imagine, everyone, that the demand for housing is still out there, but the number of folks that are applying for home loans has dropped dramatically. So I wanted to have Carly on today to talk about options. What are your options when rates continue to go up, and even talk still about another rate rise. So there've got to be some creative solutions for folks that still want to buy a home in the near future. So glad to have you on, Carly, as an expert to help our folks out for a few minutes.
Yeah. Thank you. Thank you again for having me. And
Absolutely.
Yes, you are correct in regards to all the stats and the increased interest rate, the projected interest rates increasing as well. One thing that a couple of ideas and what we've done to help our buyers is a couple options. First, an attractive program that we have introduced to our buyers is called the 2-1 buy down.
Okay.
2-1 buy down is a great program that helps the buyers with the initial payment shock or the quote unquote higher interest rates. And it can be used on any program that is non-jumbo, conventional loans, high balance, and all the government programs. And how that works is a buyer can get an interest rate temporarily 2% below today's current base interest rate. So let's use an example. A $700,000 purchase price, 10% down, 630 loan amount, today's base rate at 7%, a buyer will get an interest rate of 5% for the first year.
Okay.
And in our example, that's an $809 monthly savings for the first year. Then year 2, they will get an interest rate 1% below today's base rate. And in our example, that is 6% with a monthly savings of $414 on a monthly basis.
So that's year 2.
That's year 2, yes. So how this works is with a seller or builder participation. Ultimately, would come in a form of a credit. On average, again, depending on loan size, it can be anywhere from 1.5% to possibly 2% of the purchase price to help pay and subsidize these monthly payments, right? So it really depends, because each program allows a seller credit anywhere from 3% to 6%, depending on the loan program used. Okay. So with the seller credit and or builder credit, that pays for that difference in monthly payment. And that also helps the seller at the same time incentivize the buyers to purchase possibly their home versus the home down the street, right?
Sure. I mean, it's getting harder to sell. I mean,
exactly.
Homes, of course, during COVID were flying off the shelf with multiple offers and offers above asking, and now it's almost completely the opposite, where you can't even give the home away. So what kind of incentive? This is an incentive for a seller to create for buyers to consider their home.
Yes, because you want to, as a seller, instead of keep doing a price reduction over price reduction, if you're able to incentivize a buyer with a lower monthly payment to purchase your home with the difference of maybe a $15,000 seller credit, that's going to go a long ways with that seller in comparison to the price reduction, right? And everybody's happy.
Right.
So it's just another option. Another option that we have talked to buyers about a lot is if you are getting a seller credit from the home or the seller, instead of using it for this 2-1 buy down, you can use it towards a permanent buy down.
Okay, so how would that work?
So again, let's say back to our example of 700,000 purchase price, 10% down, 630 loan amount. If you were at a base rate of 7% at 0 points, and you got, let's say, 15,000 to work towards buying down a rate, let's say 2 points, you can get an interest rate, let's on average, again, depending on the day, of 6.25, right?
Okay.
So that payment difference is $312 a month in our example. But again, that is over the life of the loan. It's not a break just for the first 2 years. It's really for a permanent interest rate reduction for the next 30 years.
So
So
30, on a 30-year fixed.
it's all on a 30-year fixed, yes. So therefore, it really depends, in my opinion, on the plan for this home, for the mortgage. What is the buyer looking for, right? So everyone's situation's a little bit different, but that's when I sit down with them and talk to them about their plans, short-term and long-term, so then we can fit them in the right program and utilize the funds the best way.
Gotcha. Now on the 2-to-1 buy down, at the end of the second year, the rate does go up to the current rate, correct?
Yes.
So what's the thinking on that? Why? I mean, I know you're saving money for, good money for a couple years, but then all of a sudden are you jumping up dramatically? What's kind of the theory behind this program?
Well, it's again a 2-1 buy down, or temporary buy down is what it's also called, because it's temporarily giving you that break for the first 2 years. But the good thing is, on year 3 and for the rest of the term of the loan, it will still be at that base 7% rate based on the example, and fixed, right? It's not an adjustable rate. It's not a fixed arm. It's, what you're going to be getting on a monthly basis. Sometimes it's best to utilize this if, for instance, somebody has, and I've seen this scenario, a car payment. Car payment's not 30 years, maybe 5, 6, or 7 years.
Right.
They know that car payment is going to be gone maybe in a couple of years. So that difference in the monthly can then help them with their monthly output in those 2 years, right? Or if someone's going to work towards a certain job position, or they see that they're getting an increase in pay maybe 1 or 2 years out, therefore they know their financial circumstance might be better in a year or two, right? Again, sitting down with the client and really seeing what their plan is, what their future looks like, to kind of see what works best for them.
Gotcha. Well, it's such a new environment. We have to think so creatively out of the box, because when the government wants to slow things down, they certainly know how to do it, and they've done a very good job at that.
Right.
And that has not slowed the demand for housing at all.
Right.
And I know we're trying to get inflation, under control, and that's what this is all about.
Right.
But that doesn't, stop the need for everybody to have a house to
roof over their
live
head.
in. And the American dream is still alive and well. So everybody wants to be a homeowner, or most people do. So just some creative ideas. And how would people get a hold of you? I know for folks that are watching, they can see your information on the screen, but for folks that are listening out there, how best to reach you?
Best way to reach me is my cell phone. My cell phone is available via phone or text anytime at 805-302-8224.
And you cover all of California, right?
Yep, correct. Licensed in all of California. And we do obviously have those that might be looking to go out of state or purchase a second home out of state. I do have a in-house interstate lending team that I work with that can help as well.
Yeah, because the money store is pretty broad reaching.
Yes, nationwide. You got it.
Well, Carly Rosalez, thank you so much for joining this 15 minutes with the Realtor, and we greatly appreciate it. And I'm sure we'll be talking to you again soon.
Thank you.